So doing a little bit of weekend research. I watch CNBC and I like some of the data that is presented on there. I don't watch CNBC for, we're talking about CNBC right now. I don't watch CNBC to get advice. I fact check it, get sentiment, data that is presented. Mike Santoli is one of the commentators. He has some really good advice, or not advice, but data. And so he presents a lot of really good data. I can't remember if it's 2 L's or 1. But one of the sets of data, one of the pieces of information is that I heard this week him say is that he knows of trading systems that buy the market on the close if the VIX is 3 points off its high. So I wanted to fact check that. I wanted to test that and to see if that strategy actually works. And so there was no exit specified for that type of strategy, so kind of have to guess at a strategy. But I want to show you the easy language and some of the back test results. First of all, I call this test Mike Santoli VIX, and so if you take a look at this code, I'm showing you the code here. So basically, if time is equal to 1500, this is based on Central Time, which is 1600 Eastern Standard Time. And if you look at the futures are, if you put it on the exchange, the time zone is the exchange at Central Time. And so 1500 is 3 o'clock p.m., which is 4 p.m. Eastern Standard Time is if time is equal to 1500 and close of data 2. Data 2 is the VIX. We're looking at 15-minute bars, and the VIX ends its data stream at 15:15. And so if the close of data 2 is less than the high D of data 2, so the high on the day of data 2 minus 3, and so the close is less than the high minus 3, then buy this bar on close. We're buying data 1 on close. So there's different ways to exit it. So we could set the profit target at 2,000, set the stop loss at 1,000, a 2-for-1, or we can say set exit on close the next day, exit at the end of the close the next day. We could add that if we wanted to. This is commented out right now. And this is some basic easy language. I love easy language in Tradestation because you can quickly test ideas like that. The data is there. You know, one line of code for entry and set stop loss and set profit target. And so we're just looking at one futures contract on the E-mini S&P. These are the back test results going back 7 years. And so you see from 10-16, we went back 7 years to 9-11-13. You know, you have to consider the fact that there are days when the range on the VIX is less than 3. So you're not going to get, there's a lot of time periods where you won't get trades because the range on the VIX is less than 3. So you're not going to have a scenario where the close is 3 points less than the high. That alone tells you that there's a lot of range in the VIX, and that could be potentially bearish. But you're trading basically a volatile market. And so you have this uptrend here in the equity curve into 2018. 2018 was a down year all the way into the pandemic, and the pandemic started here. The Fed started printing more money. Its new stimulus package came out here on 3/23, and it's done well since that time period. And so it didn't do well for about February of 2018 until about March of 2020. So a 2-year period in here where buying a VIX that was 3 points off its high on the close on the E-mini S&P futures was down. Overall, it's net profitable, and there could be ways to make this better. What if we say, what if we exit on the close on the following day? We don't want to exit on the close on the current day because, you know, the current day we get in right at the close, and so we don't want to exit on the 24-hour session. We don't want to exit at 1600 while getting in at 1500. That's a 1-hour trade. It ends up just being a 1-hour trade if you do that. So the next day at the close, let's do that. And so let's see what the results would be. So similar, more trades if you do that. What happens if we increase the stop loss? The average trade profit is good. The drawdown is just huge. And so it's not really that great of a risk reward. What if we end up making the stop loss larger? $2,000 stop loss versus a $1,000, so it turns into a negative scenario there. What happens if we make a tighter profit target? $1,000 profit target, right there. So overall, it's these basic scenarios are not. It's not that great of a strategy. It could probably be made better. There's probably a way to make this better. And maybe if the market is down also, or buy at the open the next day, if the market is still down potentially. So those are some ways to do that, and that's the strategy development session that I wanted to share with you today. That's how you take data that you hear on TV and you back test it. Maybe you come up with an idea. Maybe it just creates ideas in your head that you could test when you hear data. That's why I like to hear commentary from financial news media, not to take straight up advice on when to buy or to sell, but to use the information to help me come up with ideas to research and to take kind of a broader look at a broad view of what other people in the market are looking at. And so wanted to share that video with you this morning for some weekend research. It's a little bit of an easy language lesson there as well on how to reference data to and looking at data to scenarios.